Good morning, everybody, and welcome back to Beat the Bell, presented by Kane Capital. Excited to be back with you guys. Hopefully, you're all having a phenomenal trading week thus far. Today's going to be a fun episode because we got a special guest with us. Matt from Rocket Scooter is here to join us. Let's get straight into the panel, starting with Matt. Matt, good morning to you, brother.
Hey, guys, what's up? Good morning. Thanks for having me on. How are you doing today?
Doing phenomenal. Excited to have you back. I know you got some pretty awesome stuff to share with us. So excited to get into that. Diamond Trades, good morning to you.
Alejandro, what's going on? Anytime we have a guest on, it's going to be an amazing show. So excited to get into it today. Fed forecast coming your way in a little bit.
And Stock Snipa, good morning to you.
Good morning. Hope everyone's having a great week so far. Got lots more trading to do, but let's get to it.
All right. Noah mentioned it, Fed forecast. Let's dive straight into it. What do you got?
Yes, sir. Let's kick it off with the economic calendar. So we had balance of trade just now, which actually came out. That's really going to be the only high impact news for the rest of the week. We do have weekly jobless claims tomorrow and inventories, and then Friday some medium impact news. But that is really going to be it as far as news. As we mentioned on Monday, pretty muted this week, but next week definitely heats up with CPI, PPI, FOMC, retail sales, and UMISH. So look forward to a lot of the news that we're going to get next week. Yesterday, the market's traded in a range for most of the day before closing green on all three indices. Qs added about 0.4%, the S&P added 0.2%, and the Dow added less than 0.1%. Both the NASDAQ and the S&P 500 closed at their highest levels since the start of the year. The S&P 500 is actually very close to being officially out of bear market territory. A bear market that would be sort of denoted by a 20% rally off of the lows that we set in October. And so I believe that the S&P 500 is somewhere like 10 to 20 points away from officially being out of bear market territory, which if you're a perma bear on FinTwit, this might be the final nail in the coffin for you. It's going to be really interesting to see what folks have got to say when we're finally out of this bear market and officially back at the start of a new bull market, regardless of where you think we're going or how you think sort of the macro picture looks. Just by definition, that is where we're about 20 points away from that in the S&P 500. So we'll look out for that going forward. The tech heavyweights that have carried the majority of this rally have really held up since the start of the month, with NVIDIA being the only name that is not green of those five. Ryan, you have that chart of there we go. So Amazon leading the way amongst the mega cap names here. Google and Microsoft also doing their part to perform. NVIDIA is the only one, as I mentioned, that's not green so far for the month of June. We're only 7 days in, so it's got some time. Likely also related to the fact that they just had an insane rally to end out the month of May there, so it might be just sort of cooling off a little bit. But the tech heavyweights have really been holding up their own end of the bargain since June has started. Much of the strength in the markets that we've seen this month really has come by way of the Russell 2000, which is up almost 6% since June 1st compared to the NASDAQ's 2%. That 6% jump in the Russell accounts for more than 90% of the Russell's year-to-date gains. So the Russell is up somewhere like, I think, 6.3% year-to-date and is up 6% in June alone. So it was really trading flat for the majority of the year as, tech sort of led the way and the S&P 500 caught a bid. The Russell was really sort of just staying in a range and muted trading, and that really was sort of related to the banking crisis that we had both in May and March with First Republic and Silicon Valley Bank both going under. The Russell has a decent amount of exposure to those regional banks, and so as those names were selling off, I think that was sort of holding back the Russell. And as you're seeing now, as investors get a little bit more confident in what's going on in the banking sector, feeling confident that the Fed is going to be there to sort of protect those banks, we've seen a bit of a rally in regional banks in particular. So the regional bank ETF is up about 14% last month, still down 26% year to date. But I think that bid in regional banks has definitely helped relieve some of the stress in the Russell, allowing it to sort of stretch its legs here and pretty significantly outperform the NASDAQ since the start of the month. So maybe a bit of rotation there out of tech and into some of the more beaten down small cap names. We'll see if that trend can continue. And then the last piece of news that we had yesterday, piece of market moving news, is Coinbase Global was sued by the SEC on Tuesday. This comes just like 24 hours after the SEC also sued Binance, which is the world's largest crypto exchange. The SEC claims that the company has been operating as an exchange in the U.S. without being registered as such, and thus being without being overseen by regulators. Coinbase dropped over 25% yesterday in pre-market trading before pairing some of the gains. Some of the losses, rather, to close down 12% on the day, according to the SEC. Coinbase has earned billions of dollars in revenue, among other things, collecting transaction fees from investors whom Coinbase has deprived of disclosures and protections that registration entails, and thus exposed to significant risk. Coinbase CEO Brian Armstrong has previously been, really vocal about the tough situation that they're in, operating in a new and developing space, and has honestly been sort of pleading with regulators to, come to the table with some of these crypto entrepreneurs and maybe set some guidelines and some frameworks to sort of avoid this type of thing, to avoid, the SEC having to take enforcement action. And it seems like those pleas fell on deaf ears, as the people who are sort of against this sort of action by the SEC would say, well, you guys didn't really set clear rules of the road. And so regardless of what Coinbase or Binance did, they were going to be operating legally because you guys did not set down the framework for which they had to follow, right? And so we'll have to see, how this one plays out. Coinbase is expected to fight this litigation in court. Should they lose, the blow to their business would obviously be significant. I believe about more than 80% of Coinbase's revenues came from the U.S. last year. And so, this interestingly enough, Coinbase is not down terribly. So, I mean, maybe the market believes that they may be able to eke this one out in court. We'll have Stay tuned. But that'll wrap it up for Fed Forecast. Pass it back to Alejandro.
Awesome stuff, Noah. Thank you, sir. Let's shift focus here. We're going to take a look at the S&P, and we're going to take a look at the system. So quickly going to talk about trend and what we've got going on, zooming out here. So we, of course, have the 30-minute chart and the 1-hour chart. We got our 50 SMA and 10 SMAs. And bigger picture, guys, we're still, and as visualized by the 50 SMA, in a very, very strong uptrend here. So visual representation of momentum in the market is, of course, that 50 SMA on this 30-minute chart and on the 1-hour chart. For bears to really have any shot to sell this thing off, we're going to want to see a break below the 50 SMA on both the charts. Yesterday, I tweeted towards the end of the day that 50 SMA was coming up as support, and that's where we got the bounce at the end of the day. So today, as long as we're trading above that 50, I would expect some sort of a bounce today in the S&P. The thing is, we have recently experienced, as you guys know, a 100-plus point rally, and after a 100-plus point rally, you typically get a sort of hangover, and you typically get choppier action, and the S&P has to do one of two things in order to kind of reset itself. It's either going to chop around for an extended period of time. It could be days. We've already seen chop for a couple of days. It could be weeks, okay? Or it's going to pull back. So just because we see this sort of bullish look on the S&P using the system, it doesn't necessarily mean to load the boat and go long. It's just important to understand the bigger picture and important to not be fighting the trend. Okay, guys? So that's what we got going on with the system here. And now we're going to go over to Matt, who's got some rocket scooter stuff for us this morning.
Hey guys, what's up? Good morning. I was going to go off of what you said. I actually have a little report I'm going to present if you guys want to show my screen really quick. I've got the commitment of traders up. It's a report that's published by the CFTC, and it talks about the reason we're in this bull market and why it's still going to be bullish. I'm going to show you on Rocket Scooter how it shows the same thing. Can you guys see my screen?
Go ahead and hit the share screen button. It should be right in the middle of your screen there, and then you can take it away.
Yes, sir. Let me got this. Okay. So what I'm going to do is I'm going to show you guys a report that is something I look at every day. And let me know if you can say, okay, good. This is the commitment of traders. And basically what it shows is active positions in the futures markets. And we're looking at the S&P mini. This is the actual price of the S&P. And then these are the positional distribution. Take a look at this. This is where asset managers are, hedge funds and market makers. Easiest way to see it. And whenever you see these green and blue lines fan out or pinch together, the market's extremely liquid. This is a net position, so net long positions becoming more long. We've been getting long since October. This is an actual genuine rally of people buying the market. So the market is definitely bullish despite all these bear fundamentals, which is kind of cool. And you also see as shorts are becoming more short, the blue line is the net short of the market. So in a simple way to explain it, people are betting against the market and betting on the market. Market's becoming increasingly liquid, and liquid markets do not crash. So for all the bears in the world out there, you just see this stable, every red is getting bought up because you have people planting their money in the market. And this is a cool chart to look at, and Rocket Scooter will support kind of the same positional data to show you that, I see markets move up. I don't say, well, why would I want to fade it if every asset management firm in the world is still longing this thing? The last thing to take is when they are liquid, when the entire market is liquid, just means lots of buyers and sellers ready to act on the market. The market makers themselves, this red line being above zero, I'm going to teach you all something very cool. The red line is the net position of the market makers, and never in the history of this report has the stock market crashed under its own weight while the market makers were positive, while they're holding a net long position. The banks don't crash the market on themselves. So we are safe for another month or two, and that's really neat to see. If you go to Rocket Scooter, there's a brand new feature we just created, came out this last quarter called Monthly Maps. What Monthly Maps does is it has the ability to show in the options market that similar setup. So in Monthly Map, what you can see is that this is active bull and bear zones on Rocket Scooter. And you can see that the trend is if the bull zone bottom goes lower, the market bulls are becoming stronger. If the bear zone top is going lower, then the bears are becoming weaker. So comparing it to the other chart, bulls are stepping in and getting stronger for the next 2 weeks. Bears are squeezing out of their shorts for the next 2 weeks, and things don't start getting volatile with this big space until we lead up into next month's Fed. So it looks like people are very confident in us getting a 0 basis point hike Fed pausing rates, and the market sustaining bullishness. This pop-up to me isn't a pop-up to short. This is a long to chase. And so both of these reports show actual positional data. It's not technical analysis. So whenever you see these Wall Street positions moving around, that's when I start to shift my mode into being bearish. And if you can see that this bull side being stronger only becomes weaker, like sell-off weeks here, and then starting here. The sentiment starts to change in the middle of August if you see where my mouse is. This market is comfortably bullish until the middle of the summer. I'm not going to fade this at all, as a matter of fact. So that's how we're doing our analysis. And with Rocket Scooter, we always have the ability to forecast in the future. Monthly map is our hot new feature. It takes the same information that we normally do on the daily basis, which is to find day trades. This looks at swing trades and the way I can position myself over the course of time and expect the market to move in the same direction, for a couple of months. So I can plan swings, hedging, anything. So that's where that is. If you guys are talking about other things like Apple and other stocks, take a look at how Apple's looking, right? Just as a general sense, Apple is becoming extremely bullish right now, and bears still are squeezing. And then, of course, this week going into the middle of June is when we're going to start to see some profit taking. So stocks like Apple are pressing all-time highs and rejecting. I'm more akin to thinking we're going to break out before we sell rather than reject from here. And then you could say, what does it look like when a bear stock is kind of bearish? Well, Disney has that same look, right? Disney fell on earnings. And of course, the bull side is becoming very weak and the bear side is becoming very strong, which indicates that right here, Disney wouldn't be a dip to buy. And as you see, the lows are becoming lower. This is forecasting into the future. So I don't see this and go, okay, Disney's a long for me to get into just yet. It's got some more bearishness along the way. This is a cool new feature we have. So we're glad to share that. All you do on Rocket Scooter, you click this little monthly map button and it populates it for you. So
yeah, we've been using that a lot.
Maps? Oh, cool.
Specifically Money Mander. I wish he was on this morning, but he's been doing a lot of swing trading and he's been having a lot of success using the monthly map. So it's an awesome feature. I encourage everybody to check it out.
Thanks, man. To me, it was very helpful. Most traders that trade options, the question was always, what expiration do I buy? And that's always a hard question, right? If you're day trading, a lot of people get into different styles of options. There was really no science to that. So our goal was to tackle some kind of science to that. You're bullish for so long. How much room do you need to buy on your option? And this is where it stops being bullish 3 weeks out or 4 weeks out. So then your option has to target that range. So it helps solve that one problem for people. So we're excited about it.
Matt, let me ask you a question. I've been seeing all over FinTwit this weekend the bear porn sort of story. The hot story was, the Treasury is going to be issuing like $80 billion in bonds, and that's going to reduce the liquidity in the market, and that's going to bring the S&P 500 to zero. And it's funny that you mentioned that we're seeing an increase in liquidity actually as longs are getting more long in the market and shorts are getting more short. Would you say that sort of phenomenon has not happened this week, or what do you expect to see there?
I honestly think the market's becoming liquid because at some point, if you're a hedge fund or you're some kind of investment group, your money sitting as cash is going to burn X amount per year due to inflation. If the stock market is burning in a bear market less than X percent, if Y percent is less than X, you're going to place your money into the lesser dumpster fire. If you're not going to lose 5% inflation, the stock market on the last 3 years average losing maybe 2% a year, you would put your money in the stock market just so it would lose less than just being cash. So at points in recessions, the reason recessions go down and up and down and up and trade their way down, because in times of high inflation, people tend to find stocks to be the answer to inflation when fixed income is not the answer. And the bond market gets flooded and bonds become cheap. Yields will go up, which will attract people to that and pull liquidity out of the stock market. But if it doesn't beat inflation, your fixed income gets gobbled up by the inflation rate. It's not an attractive trade. The stock market is always attractive during recessions. That first report I showed you, Commitment Traders, will show you as markets fall down, people buy dips the whole way down. Asset management groups just throw money every time it gets cheaper because they're playing the long game. But the bear porn is funny. It's not going to bring the S&P to zero. The S&P is extremely liquid right now. And when shorts bet against the market and the banks are holding the bag, who do you think wins that bet every time? The banks never lose because they control the price. So they're going to burn the shorts out before they let the market fall. And that's exactly what we're seeing.
Awesome, Matt. Thank you for that clarification.
All right. Good stuff, guys. Let's go now over to Stock Snipa, who's got Bet the Bell for us. for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys.
Well, I'm not Ramsay Rippers, but here's Bet the Bell.
It's a good intro.
Stats are rigged, just so you guys know. Ramsay does rig the stats. Probably would not appreciate me saying that, but
Clear-cut winner now. Clear-cut winner now.
All right, let's go.
A couple weeks ago's debacle.
All right, so I'm going to hit it with the first question. You guys already know what's coming. Green or red?
I'm going green today.
Diamond.
I will go red. I'll go red. Red
Matt,
close.
what you got?
Green.
2 greens and a red. You know, I'm going to have to pick red just to even it out. Well, not just to even it out, but I do think
I like that.
red. Next question I got for you guys is, by the end of next week, the following week, will we see Apple over or under 187.5? Just made new all-time highs. What do you guys got? Hondo.
So, I just watched Matt go through the Apple monthly map and tell me that he thinks we're going to reclaim the recent high and that the breakout is going to stand, which I agree with. But by next week, I don't think so. I think that this name is going to have a little bit – it has to cool down. Looking at the higher time frames, it seems like the trend is just chilling out for a little bit, looking at the 30-minute and the 1 hour. And also keeping in mind, they just had the release of whatever it's called, the Oculus, their new gadget. And I think because of that, it had a giant run up, and things just need to chill out for a little bit. So by the end of next week, no. I think the safe bet is no. I mean, if it rallies to 187, I mean, phenomenal. I own Apple, would love to see it, but
Diamond.
I will go with yes. I'll go with yes over 187. Tim Apple is just an absolute dog. That's an awesome product that they released. If you guys watched their product demo, it felt like an episode of Black Mirror, to be honest, which I don't know how I feel about, but I thought it was really cool. Stock's been on an absolute tear. Don't bet against Apple over 187.
I'm being told it's not called the Oculus.
It's not called the Oculus. It's not. It's like the Vision Pro.
Vision Pro.
Yeah,
what's the Oculus? Where did I even get that from? Is that
that's
Meta?
Meta? That's Meta. Yeah.
Oh.
Yeah.
All right. Sorry, I apologize.
Yeah, just confirmed Vision Pro. Yeah, so I find that pretty interesting. Matt, what do you got for me? Over or under 187 by next week?
Honestly, man, I think that the Apple ski goggles look super cool. Like it's a little pricey, but I think that it's great. Apple's always a banger. Apple is killing it. By next week, Apple's going to continue to trade higher because there are stocks like Tesla and others in the Nasdaq that haven't moved, that are still going to move, and everything's going to move as long as things are bullish. Once you start seeing the Russell move, people are so comfortable in the blue chip stocks that they don't come down. That's a trend when coming out of recession. So the stocks going to all-time highs are going to go to all-time higher. That's my bet.
I like that. Yeah, as an owner of Apple and seeing the new, well, I don't want to use the term Oculus, but the Vision Pro, I think that Apple's gunning for 190. I'm not going to lie. But I'm going to bring this over to my third question, which is pretty interesting. We've seen a lot of news in the crypto space with Binance and with Coinbase now, but the SEC reportedly seeks temporary restraining order to freeze Binance U.S. assets. How do you guys think that this is going to impact the crypto market going forward? I'm going to have to start it with Matt.
Honestly, this is a long time coming. The SEC it's a lawsuit that's destined to happen. This is the big question: is crypto to be regulated in the U.S. because there's U.S. clients? Clearly, we can't go trade off the market and trade CFDs. It's an illegal product in the United States. So they're trying to deem that you can't trade certain things outside of U.S. markets being a U.S. trader. It's a great question. Should you regulate the crypto markets? And the crypto markets are like, well, you never gave us clear regulation, which is the legal defense to take. And so all it's going to do is bring the SEC forward to give either structure to the industry, give laws to the industry, or even regulate the industry. And crypto is just playing the, well, we didn't know what we could or couldn't do, which allowed them that legal flexibility because there were no rules. So clearly that lawsuit was destined to happen. What do I think is going to happen? Anything that has control over U.S. investors and U.S. investment groups and has the ability to collapse the banking system, the government's going to step in and try to find some way to regulate it. It's a dangerous world. And the idea that you had very large banks that had exposure to these markets and that you have obviously fraud coming out of some of the crypto trading exchanges and such, and, you know, obviously arrests and things, the government's not going to turn their head to that. They're going to not let the potential framework of our investment integrity fall underneath unregulated exchanges because a huge majority of U.S. people are circumventing things to go over there. And obviously when you can circumvent, there, you know, other people get angry, like you're not paying taxes, you're not paying fees to the exchanges. So everyone's going to look your way and want their cut of the pie. U.S. investment dollars can't escape the U.S. Infrastructure to go trade. So that's why the SEC is finally chiming in. Everyone has interest in seeing crypto have some kind of rules, especially when it's driven by, you know, the public opinion. Investors lost a lot of money. Now they can kind of say, well, now we have a good reason to go after it to protect the U.S. investor. But now, I mean, there's all the reasons to go into it. I think that what it's going to do for crypto, it's obviously going to be a long-term thing. I don't think it's going to be just yet. Over the course of time, just crypto is going to really move just on the sake of the recessionary mechanics. The riskier things rally last. So as we saw, the S&P and NASDAQ are moving the tops. The Russell came up yesterday. Russell's going to move next. High yield debt's going to move next, and crypto is going to move last. Riskiest stuff always rallies last. So I don't think it's going to get any rally potential for a year. I think it's kind of a doom and gloom under its own weight and mechanics of just being a risky asset, not just this lawsuit.
That was a great answer. Couldn't agree.
Yeah, maybe just skip me.
I was a little intimidated after that.
Since Matt just dissected that.
The only thing that I'll throw in is that I really do hope, to Matt's point, that this is more of a let's find a regulatory framework for which crypto can work in the United States as opposed to just, you know, a stifling of innovation. Because I think at the end of the day, you know, with how globally integrated the world is, you would hate to see major crypto players just up and leave and move to another country and say, you know what, the regulatory headwinds that we have to face to be successful in the United States are just too high of a bar. Let's move our operation to, you know, the Middle East or, you know, Asia or wherever. I think that we want that innovation to happen in America. We want to be at the forefront. You know, of that next wave. And we want to have the Coinbases of the world, you know, be the leading crypto companies. And so, you know, wherever you sit, I think that you would have to agree that you hope that this is something that can get resolved sooner rather than later. I think, you know, the longer that it takes us to really nail this down and find, you know, a way to safely regulate this industry, the longer that takes, I think that the more it's going to actually hurt the United States in the long term. We want to be at the forefront of this move. You know, we've been the leaders in innovation everywhere else, you know, over the last several decades, and we want to maintain that position of American superiority.
Hondo, you want the skip?
Yeah, these guys did a great job. We're all right.
I'm not gonna lie, Matt hammered the nail in, and Diamond just put it all the way in.
Yeah, I love what Diamond said. Basically, if the U.S. gets its cut, that's basically going to be a happy medium. That's where it'll be. So I think that they would have better interest in creating more avenues for people to trade, because exchanges create new instruments for people to trade. Because the more tables at the casino, the more dollars go up the ladder. So if it all can come under the umbrella of jurisdiction in the United States, and it's a taxable thing you can trade, and all the stuff, all the pieces line up, I don't think the U.S. government will have a problem with that. They just have a problem with money going other countries and offshore, and then not able to take their cut.
Makes sense. Yeah, that'll wrap it up for Bet the Bell, guys. Hope you guys enjoyed. I'm going to pass it back to Hondo here.
All right, awesome stuff. Last thing we're going to do here before we wrap up the show is Member of the Week. Ryan run that quickly. That is Haji, and Haji is not a cat. Haji is a real person who had an awesome week last week, who continues to trade really well. He had a 40K day last week. It was just nuts to watch in real time. I remember at like noon, he was up like 17 and he was like, I'm done. And then he sent another screenshot later in the day that he was up 40,000. The cool story I'll say really quickly about Haji. So for those that haven't listened to the episode or don't know the story, I collapsed like 100 yards from the finish at the New York City Marathon. And the next day, or maybe it was a couple days later, some guy comes into my DMs and says, hey, man, I saw you at the marathon. And I was the guy that was kind of like directing the EMTs because they didn't know how to treat you. And he was looking to learn how to trade. And next thing you know, we started talking. I obviously invited him to come trade in Cane Cap, but I never met him. And he helped to treat me when I was in really, really bad condition. I never even saw what he looked like, never even, was able to look up to acknowledge him. But the fact that we were able to connect and then fast forward, 6 months, he's just absolutely crushing it. I think it's an awesome story and it makes me really, really happy. So congratulations to Haji, crushing it in the markets, crushing it in life. He's doing good stuff. All right. That's going to wrap it up for this morning's show. Matt, thank you for joining us. This was a lot of fun. You provided a ton of value.
Yeah, thanks for having me. Always love being on your show.
Awesome, man. Awesome. All right, guys. For those of you that don't know, we'll be trading live all day in the Cane Capital Discord. You can go to cane-capital.com or scan the QR code right by Diamond's face. But that's going to do it. Good luck trading today, everybody. And we will catch you back here on Friday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.